and Tax Solutions. And I'm here today with Ted Burgess from Inception Financial. Ted, thanks for joining me today.
Thanks for having me. Looking forward to it.
Yeah, I'm looking forward to it as well, Ted. Well, this is going to be a special educational session for you. We're going to talk about something that we know a lot of people really haven't heard about, but it's been a strategy that's been around for years to help mitigate taxes. And so before we do that and dive in with Ted, because he's got a lot of great information, I want to just kind of set the stage. So we'll move through this and then we'll let Ted kind of take over as it relates to that. So if you don't know who we are a registered investment advisory firm that is fully independent. We have offices in Northern Indiana, Detroit, and Fort Myers, and we serve clients all over the country. We are a fiduciary, being a registered investment advisory firm, and we do custodian through institutional custodians like Schwab. Our investment advisory team has more than 130 years experience combined, and we just want people to know that we're transparent. So let's talk about setting the stage today. So if you're a client, I want to thank you for allowing you to let us guide you along your financial journey. If you're new to Hilltop, we'll talk in the end how you may connect with us if you've got additional questions. I want you to know that Ted and myself, we're not here to sell any product. This is not a product presentation, nor do we take any investment product sales commissions. We only use these strategies when we're working with comprehensive wealth management clients and we do a full tax analysis. These are not strategies we're trying to sell you like other products. We're using this to help mitigate tax for those clients that make sense. Let's talk about kind of what we do, and then we'll roll right into Ted. So what we do at Hilltop is we really act as your chief financial officer. What I say is that when you're climbing the mountain, you want to save and invest. You want to typically minimize the taxes, make the best decisions for yourself. And then as you get to the top and you come down, that's really where it really is important, because you'll have a lot of financial decisions as we go, and you may decide in Social Security. Taxes probably will be your biggest expense in retirement. Longevity risk, making investment decisions, when to take from your IRAs and so forth. So what we're going to put a piece here, and what Ted's strategy works into, is it works climbing the mountain, okay? If you're really looking for mitigation on your taxes, and then it also works on the way down. So with that, Ted, I'll tell you what, I'll turn it over to you and let you introduce yourself and give us a little overview, and then let's dive in, Ted.
Yeah, excellent. Thanks so much. My name is Ted Burgess. I'm based out of Austin, Texas. I've been personally deploying this strategy for myself for years now. And I have the fortunate experience within the industry to where I have been in the renewable space for almost 2 decades now. And the primary vehicle or function that makes the renewable energy industry go forward, like many industries similar to oil and natural gas or others, is really tax incentives. And those tax incentives have previously only been available to large institutions. You think about some of the largest companies in America, they're using tax incentives to achieve their goals, to preserve and to build wealth. And what Inception has done for me personally and for many of Inception's clients is enable us to save on our tax liabilities. Now, I was a W-2 employee for a long time. And when I went to my CPA or my tax team, they always said, yeah, there's really not much that you can do. You can obviously do retirement plans and real estate and things like that. But there really weren't strategies available to me to help mitigate my total tax liability. And that's what really brought me to Inception and has grown my role here, is the fact that, I didn't want to do something that was very risky. I was not interested in making massive life changes in order to save on taxes exclusively. But as Erik said, taxes were one of my largest expenses every year. Some years, 30, 40, 50% of my total working hours were going towards taxes. I was working for taxes. And so, the nice thing about these tax credits and tax incentives is that they're battle tested, fully codified, and I was able to move forward with the strategy personally without any kind of hair on the structure. Some of the largest banks, Goldman, Morgan Stanley, Apple, Google, Netflix, have all been deploying this strategy for years and years, as Erik said, since I started in the renewables industry in the early 2000s. These strategies existed, but not for retail clients. And so I was very happy when this became available to me. And what Inception Financial has done is really nothing short of incredible in terms of being able to repurpose over $250 million of tax liability to save over $50 million in taxes saved. That's money back in clients' pockets. And for those of you not familiar with solar energy, it's often measured in a kilowatt, a megawatt, or a gigawatt. And gigawatts are huge. You think big solar fields. Inception has over a gigawatt of assets under management, so solar projects under management. And the program's been deployed through organizations like Hilltop for over 6 years now at the retail level. So again, not new and also very proven. Now, in various climates, sometimes certain tax credits and certain asset classes, we get a question more often than not, which is, are these tax benefits going to be around for a long time? As of right now, we have line of sight of these tax credits being available at least through 2032. And essentially every 6 years or so, they come up for renewal. And they've been around since the early 80s, essentially. They pretty are consistently renewed at the same or similar rates. Additionally, one thing that this strategy provides, which if you're a W-2 employee and you haven't owned a business before, you might not be familiar with depreciation. The way I think about depreciation for myself personally is if I generate $1 of depreciation at the federal level, that essentially means that I can go out and earn $1 on W-2 income and not have to pay tax on it. That's the way I think about depreciation. And so this strategy enables folks who traditionally are not allowed to get depreciation to take advantage of those tax benefits as well. And what's really interesting about this strategy is you have to address your current year's tax liability first. So, we're in approximately the middle of 2025 now. You have to use this strategy to address the current year's tax liability within that current year. So you have to start deploying this strategy for 2025 tax liability that you're incurring. But if you're able to address all of your tax liability for 2025, you can actually contribute more through this program and actually go back in time and save on tax dollars that you've already paid in previous years. So if you think about in April of 2025, how much tax from 2024 you ended up having to pay, you can actually contribute to this strategy this year and get a refund check for those taxes that you've paid in prior years up to 3 years. And it goes in a reverse waterfall. And so I've personally done that for myself. I took care of my annual tax liability. I contributed extra to the program, and I was able to get back in the form of a refund check prior year's taxes. And so the rollback strategy is incredibly valuable. In terms of what we're really talking about here, we're typically talking about a 25 to 30% net benefit, which means if you go out there and you earn several $1 million, your tax liability this year might be $1 million, let's just say. And once you've taken advantage of all the other wonderful programs out there for tax advantaged investing, you might still have a tax liability left over, in this case, $1 million. And what we like to say is that this is a true tax savings strategy. So yes, use as many programs as you can to make smart investments that reduce your overall tax liability. But once you do have a tax liability, let's say a capital gain or a K-1 or even W-2 income, you can use this strategy to actually save on that tax liability. And so in this scenario, you can either choose to pay $1 million in tax liability, or you can purchase what we call tax equity for $750,000. So think of it as using this program as a cheaper version of the IRS, essentially. You can spend $1 million over here, or you can spend $750 over here and save $250,000 or more. So that's what we like to say. We like to say that you're essentially turning tax liability into tax equity.
Yeah, Ted, and in talking with folks about this, I think that's so important because most of what people think about is investing, right? This is an investment, and I have to have other monies, right, or cash flow to invest. And this is just taking what you are currently doing and paying in for taxes and taking that or some of it and having a reduced amount. And what you're saying, basically, it's every dollar, your example is at least 75 cents. So instead of paying the dollar, right, Ted, then it's paying in 75 cents.
Yep. And in practice, like for myself personally, what I did is when I was a W-2 employee, every paycheck, there was a withholding, and that the IRS was getting that money interest free from me every 2 weeks. And that withholding is based on kind of some rough math in the background of what they think I will owe at the end of the year for taxes. And so what I personally did is I actually reduced my withholdings once I began participating in this program so that I actually got my full paycheck. Let's say I was withholding $10,000 a month as an example in taxes. What I instead did is told my company, no, I'm going to generate a bunch of tax credits and depreciation. So don't withhold anything. Don't withhold that $10,000. I received that $10,000 from my company and instead turned around and gave Inception $7,500 a month and kept that $2,500 in my pocket. So this program shouldn't be viewed as taking free cash flow, money that you've got sitting in the bank, and putting it towards something. This program is really, if you pay quarterlies and you're a business owner, you could instead perhaps figure out what your quarterlies would normally be, reduce that amount, and redirect those funds to this strategy instead, and keep that money in your pocket throughout the year. So this is a true tax saving strategy. The easiest analogy is you've got two gas stations on a corner. One has a gas that's $1 cheaper than the other. You're just making that left-hand turn and deciding to spend your money at this other place where it's less expensive, and you keep that dollar per gallon in your pocket.
Great.
It's a great point. It's important to remember that this is not a fund, not a security. There's no K1s. And it's also not a tax deferral program. Many programs out there say, we're simply going to extend the amount of time that you'll have to pay your taxes. And that's great because you can put that money to work, earn more money. Those are great tax advantaged investment programs. This is actually a straightforward asset sale. So fundamentally how it works is by purchasing solar assets, solar projects, you actually are able to receive more tax benefit than dollars you need to expend. So $1 into this program is the equivalent to, let's say, $1.25 or $1.30 of money that you would normally have to pay to the IRS or normally be withholding. And one whenever I mention solar as an asset class, many people aren't familiar with it. It's an incredibly stable asset class. But one way to think about it is when you buy an electric vehicle through a business, you get to depreciate the cost of that car and you get a tax credit, right? In this particular scenario, by simply redirecting the funds that you're typically withholding or normally paying to the IRS in that calendar year, you're actually able to save that money and keep it back in your pocket. So this is like you're buying a physical piece of equipment. And by purchasing that piece of equipment, your ROI on that is essentially infinite because it's tax savings right off the bat. You're saving money day one. And so very simply, what you do is you start a solar asset management business. There's tens of thousands of these in the country, solar asset management businesses. And that's an LLC. And Inception will actually help you set up that LLC if you haven't done that before. We have paralegals on staff to help with that process. And the purpose of that LLC is going to be to buy and hold solar projects. The reason being, again, that you get to experience better, more tax savings than if you were to simply pay the IRS. Now, if you're not familiar with solar as an asset class, that might be a little bit weird because you're not familiar with the maintenance, operations, insurance, all those types of things where you start thinking about those what ifs. I'm going to buy solar, but I'm not familiar with it. What happens if there's a fire, a tornado, whatever? Inception actually provides all the technical services to maintain those solar assets during the hold period. So insurance, operations, maintenance, service, all those things are covered by Inception while you own this piece of equipment. And then your CPA is going to do two really simple things when they're claiming these benefits. There's an IRS form for if you purchase solar, which gets you the tax credit. And that tax credit is a dollar for dollar tax credit. So the what ifs there in terms of claiming the benefits are very straightforward. What did it cost? Here's your tax credit. It's very simple math. And then the other piece is depreciation, which is what is the total value of the equipment? And then what can we write off against our ordinary income? Once you've held this asset for 6 years, you can actually either hold the asset and it'll generate you just a little bit of income. It's just icing on the cake. We're really doing this for the tax savings, but you can generate just a little bit of income. So your tax bill, your former tax liability is now less. Plus, you've repurposed your tax liability that's now less into something that can generate you a smidge of income. That's pretty neat. The other thing that you can do at year 6 is you can choose to exit the system and sell the asset for its fair market value. As we all know, these solar projects continue producing power for years and years. And so they do have some intrinsic value even after they've been placed up on a roof for 5 or 6 years. And so what that looks like is this. Essentially immediately you're going to be getting those tax benefits and saving money. So there's your ROI right there. At year 6, essentially the person who has the property that the solar has been installed on, which is not your home or business, it's somebody else's, they have the option to buy that system from you at fair market value. And that would be treated like income. You're selling this asset and you're actually getting some income from selling it. We don't say that you should assume it'll be a lot, just to be very conservative. Or you can choose, if the property owner chooses not to purchase the system from you, Inception can actually broker the sale of this asset to a secondary market for fair market value as well. Now, why would somebody want to buy this asset? Well, from year 7 through 20, you, as this asset class owner, will either receive an annual payment for the administration of the operations and maintenance. So that's that smidge of income we mentioned. Or somebody else is interested in that smidge of income. And so that means they'll be willing to buy it from you for fair market value. So there is a way to get out of this, and there is a way to further monetize it above and beyond tax savings potentially. So a good way to look at this is just a broad stroke summary of what could happen here. Let's say you had a $1.25 million tax bill. You could, instead of paying that $1.25 million, you could instead purchase $1 million worth of solar. Boom, right there, you just saved $250,000. And then at year 7, if you choose to hold that asset, you can generate a smidge of income off of this over those following 14 years of roughly another, in this case, about $200,000. So you're repurposing your tax liability into tax equity, saving money, and then potentially earning a little bit of income in the long term as well. Jumping into risks and mitigations here, I think it's important to always look at the pros and cons of everything. The way the program is structured, there's no payment risk. So in other words, you're not relying on anybody else to make a payment on this program. So there's really no risk that you will, quote unquote, lose your money. The payments that other people need to make into these projects are already collected up front. So all you're contributing is the tax equity component of this offering. So your dollars in are the last dollars in before the project is signed off. There's also no construction risk because your capital is not being deployed until the panels are up on the roof, the asset's signed off, and it's ready to go. So we're just waiting for your tax liability, your tax equity contribution to complete the project. That's it. So no construction risk that you're taking on there. Further, in terms of operations, maintenance, insurance, there's years and years of contractor and equipment warranties. So the average contractor's warranty is 10 years, so well beyond that 6-year hold period. And there's also equipment warranties, typically in the years of 20 or 25 years from the manufacturers themselves, that their equipment will continue operating. Beyond that, just in case something happens, there's on-site property insurance. So all those what ifs that you were thinking of before, those lie in the hands of the property owner, the person who has the solar equipment up on their roof. We also carry an additional general liability and property loss insurance coverage on your behalf for each of your assets. Finally, Inception, as part of the technical services, is monitoring these assets to make sure that they're performing as they should, and has been subcontracted to essentially make sure that these assets continue to operate. Now, the first item here we haven't talked about yet, which is material participation. There's two types of income that essentially you'll hear about frequently, which is active versus passive income. Passive income is money that you're just kind of getting. It's passive. You're not actively out there earning that money. And passive income, passive tax strategies are very abundant. Offsetting active income, for example, W-2 income, is a little bit of a different ballgame. And in order to offset active income, you have to be doing active activities that are generating tax credits and depreciation. And so the way that the IRS determines whether something's active or passive is something called material participation. Material participation is really just, are you materially participating in that solar asset management business that you started, that solar LLC? And what that means is that you have a minimum time commitment to make sure that that business is operating correctly. And in this case, in order to achieve material participation, you have to participate in that business at least 100 hours a year. And what that means is you have to be kind of making decisions, checking in on your assets. There's a whole slew of activities that qualify for material participation. And so Inception helps you track those hours of those activities. And also, I think a lot of folks who use Inception, number one, when they look at the savings that they're able to achieve using that 100 hours, they realize very quickly that if you were to associate a dollar saved versus hours committed, they're actually earning more by doing this 100 hours in their business than they do at their normal jobs, which is kind of interesting. Their hourly rate is actually higher to save money than it is to earn money. And so that 100 hours very quickly becomes incredibly valuable to you, and you want to do that 100 hours. The other piece is that material participation can be fun. There's a lot of ways to achieve it. And also, once you have kind of committed to doing this, to saving this 25, 30% on your taxes each year, it becomes just part of your routine. And so committing to that 100 hours is probably the most important thing that you can do in terms of preserving and growing your wealth, which is, yes, I am going to start a solar asset management business. I am going to materially participate in it. And that means that my hourly rate of saving money is actually higher than my hourly rate of earning money in many cases.
Yeah, Ted, and I know, through partnering with you and our firm, your firm makes it as easy as it can get for tracking all of those hours with a portal, and so people don't have to go out and search for things to do to, qualify for material participation. So that is a big help as well. I have a question, Ted. So the projects, are based on finding projects, right? And going out and funding those projects and then getting the credits on them. And I know in the past, I know people that have purchased their own instead of leasing, on their own project, and then they get the tax credit. So what can you explain a little bit, what is the opportunity for projects, and why would a homeowner ultimately, so I own my solar business, why would they work with me versus just funding it themselves?
Yep. The bottom line is this is one of the most economical way for people to get solar in the United States. And the vehicle behind it, which is an industry term, everybody in the solar industry is familiar with this, is called a prepaid power purchase agreement. So prepaid in that all of the money from the property owner, the person who's getting solar up on their roof, their commitments are paid upfront before construction starts. And power purchase agreement in that their payment that they're making is essentially to own all of the electricity that that system will generate for the next 20 years. So the advantage here is that by buying the electricity instead of purchasing the equipment that will go up on their roof, let's say it's my house, why would I do this prepaid PPA instead of just purchasing the equipment going up on my roof? It's important to think about the motivations of the homeowner or the small business that's getting solar up on their roof. What they're looking to achieve is an ROI based on utility bill offset. So they want to save on their electric bill with a utility. And so they start looking at solar. And when you're looking at purchasing solar, it can be very expensive. And then you have to go through this process of filing for the tax credit, and you're responsible for the equipment because you own it and all those types of things. And what a prepaid power purchase agreement enables them to do is partner with a solar asset management LLC. And that solar asset management company is actually the owner of the equipment up on their roof. What that does for the homeowner is it makes it less expensive for the system to be installed. They're able to achieve their goals of saving at the utility level, and their ROI is a lot faster because they're spending less upfront. And that enables a business, your client's solar LLC, to own that equipment that provides all those great tax benefits that an individual homeowner, for example, is not eligible for depreciation, but a business is. And so this is really the mechanism or the vehicle that makes the solar industry go is everybody wins here. The homeowner wins because they're getting the exact same solar system that they wanted for less. And it's coming with all these nice technical services like operations, maintenance, and insurance. And the clients who are listening into this also win because they're able to save on their taxes by simply owning the equipment up on the roof. So in this scenario, the homeowner owns the power and they've paid for it up front from the system that's generating that power on their own roof. And the solar LLC, the folks looking to save on their taxes, they own the equipment, which is what all those nice tax benefits are tied to. So that's why this program exists.
Okay, that makes sense. So a homeowner then in this scenario, they don't get that tax deduction, but there's a trade-off, right? And they're going to get more value than just the immediate if they went out and bought it and put it on their roof. Is that correct?
Exactly. Okay. So they're coming out of pocket for less, and they're saving the exact same amount. And by partnering with this other business, that business is also winning because their contribution to owning that equipment saves them more on their taxes than what it costs to own that equipment.
Yeah. Okay. Good. And then I have I've had questions around projects because it's based on the number of projects. Do you have some stats or how you guys think about the opportunity going forward with solar? I think everyone I talk to knows there's an opportunity. I mean, it's certainly talked about and they know it's growing. But what is the opportunity that you and Inception see?
Yeah, the renewable energy industry continues to grow. We've been growing pretty consistently, 2-3x per year over the past several years because there's so much pent up demand to save on taxes and to do so in a way that is incredibly risk adjusted for each client. This is one of the best ways to do it, some of the highest returns and lowest risk. And so I think the opportunity here is we know what the tax credits are. We know how depreciation works because it's the same for many, many other types of asset classes as well. And so we look to continue to develop projects that folks can participate in. Now, our offering is incredibly modular. So whether your tax liability is $210,000 or $270,000, we can find projects very quickly that meet those equity contribution amounts, which is great. So it's highly adjustable based on your specific tax situation. Now, one caveat here that I'll say is this is a strategy that you really want to be proactive with, in that these are real material. They're not synthetic offerings. It's not a fund or a security where you can just kind of play around with it, come in, go out, come in, go. What these are true projects. And so what that means is the industry rewards those who plan ahead and participate early in the year as they earn income. And so the most straightforward way that I can say that is if you wait to deploy a strategy like this into Q4 at the end of the year, what you're doing is you're competing with all these institutions that we started off this meeting talking about who also participate in these programs. And so us as the retail client, the little guy, are then competing for projects against the big banks. And so the best time to start deploying this program is to start buying assets as you earn income throughout the year. As you earn tax liability, as tax liability is incurred, excuse me, that is the best time to be purchasing projects. And so it should be a part of your ongoing strategy throughout the year. And earlier in the year, you're going to have less competition for projects, so they're going to be more available for you, and they're going to have more favorable economics because you're not competing with the billions of dollars that big banks participate in. So contributing in Q2, Q3, Q1 are all great decisions because your economics, your total savings are actually going to be higher the earlier in the year that you participate. Project availability in Q4 is incredibly limited because we're developing projects throughout the year with our contractors and selling them as they become available. And so these projects started getting developed January 1 and started getting completed in January as well. And so every single month we're developing a consistent number of projects. So it's important that as you personally earn money, that you also are incurring tax liability. You're also purchasing assets to maximize your returns.
Great. Thanks, Ted. Well, I know we've got just a couple minutes here, so you could go on, right, and talk about solar all day. But
I certainly could. I don't know if everybody wants me to.
Yeah, if everyone wants to hear it. But yeah, a couple important other things that you want to convey to the folks today.
Yep, absolutely. So the first steps to signing up are obviously meeting with Hilltop, putting together a plan. So we highly encourage you to do that as soon as possible. Let them know that you learned about this program and you're interested in participating. Once we've kind of identified what your tax liability already has been for the year or will be, we'll want to get an equity commitment number. That's via a document called an asset purchase agreement. It's basically you agreeing that you'll buy up to a certain amount of assets throughout the year, a certain number of projects. And once those agreements are signed, then it's just a quick wire transfer. And Inception gives you a receipt for the projects that you now own. And then the CPA is ready to file all those great tax benefits for you next year when it comes tax time. So it's a pretty fast and easy process. Forming the LLC, Inception has that down very quickly. The documents are all very standardized and fast to deploy. And then really it's just deploying that capital early so that you can maximize your tax benefits as well. And the team at Inception's always happy to help.
Yeah, that's great. Well, thank you, Ted, for that. I just want to wrap up just to talk quickly on, and Ted already mentioned it, that, and I mentioned it at the beginning. So let's just take a look, how do you wrap in? So obviously, if you're a client, you work with your advisor and you have an interest, we want to make sure there's a plan in place that you have. We truly believe that, this is something that needs to be part of the overall plan. Our tax team as well, if you do work with our tax team, they're fully up to speed on working through this and how we go about making sure everything gets reported. And then Ted's team is great as a partner. Their technology with the portal and all the access and everything is really phenomenal. And when I talk about this, Ted, a lot of people just, they say, I've never heard of it. And then even after we go through the presentation, it's still somewhat unbelievable. And it's just something you don't know what you don't know. And part of our role, we think as, chief financial officers that, we want to bring, we have partners like Ted and other strategies in place. But if you're new to Hilltop, you can go to our website, hilltopwealthtax.com, and schedule an introductory call, and you'll talk with one of our team members, and they'll find out more about you. You find out a little bit more about the firm, and then we'll see if there's a fit to move on and talk to an advisor. So I want to make sure I bring that into place. I think I've got just one slide here left. Just a couple. Yep. Also, I want to offer up, I just came out with a new book. And so I want to offer this up. If you have an interest in a book, I will offer that up to you, called The Personal CFO Revolution. And you can go to hireapersonalcfo.com. You can also schedule time there as well with us. So Ted, I really want to thank you for taking the time today. Very informative. And I'm sure I'll have you back, and we'll talk more about solar, a little bit more deep dive sometime. I know you always want to talk, you always enjoy talking about solar.
Absolutely. No, I appreciate the time very much. Hopefully this was helpful, and any way that we can talk about my personal situation and how this has helped or what Inception does, I'm always happy to speak on it, and appreciate your partnership as well. Your group's been fantastic. So thank you.
Thanks, Ted. I really appreciate it. Thank you, everyone. Until next time, happy spring, and we'll see you soon.